So few days back, I posted in the Financial Impulse membership community about JSW infrastructure and recommended it for buying at the price of around 230. And people who are swing traders who do not like to hold stocks for a longer time, for them this pinpoint entry at 230 would definitely have helped. But a company like JSW Infrastructure needs a detailed analysis, which I am going to do in this video. I will do the fundamental analysis and the price action analysis and let you know if you can still make an entry in this company, and also if this company is recommended for positional traders and investors as well. So let's get started. Okay, hello everyone and welcome back to another video of Financial Impulse. So in this video, I'm going to do the complete analysis of JSW Infrastructure. So this is their official website, JSW Infrastructure. Nothing much to see here. I will share this link in the description section and you can go through it. Okay, now let's quickly go to the financial numbers and ratios and see how strong its fundamentals are. Okay, now coming to the peer comparison, we can see that it is in the sector of marine ports and services, and we have three companies in this industries. Okay, so the market cap of JSW Infra is around 51,000 crore with a reserve of 6,894 crore and a debt of 4,580 crores almost. Okay, so the debt to equity ratio is 0.63. Okay, so this number is not a great number, it's kind of average number. Okay, if it is less than 1, it's an average number. If it is less than 0.5, it is a very good number. So it's kind of average number. Now last 3 years sales growth has been at 40%, which is very good. 3 years average profit growth has been at 60%, which is again very good. But the earning per share growth has been on the lower side in the minus 48.84%. Okay, so this is one negative point about this company so far, but we have to do even more analysis to consider it for if it's a good investment or not. Now coming to return on asset, 5.42. so this number is not a great number, but we can see the other companies are having similar number in this industry, so we can say that it is a good number in that comparison. Okay, return on capital employed, 12.45 is a good number, and interest coverage ratio is 2.36. so this is kind of an average number, not a great one. Current ratio is 8.80. this is a good number. Okay, now operating profit margin stands at 50.79, which is very good. Okay, you can see the other two companies are also having similar operating profit margin, so definitely we can assume that this industry is having that kind of profit margin around 50, more than 50. Okay, now the promoter holding is at 85.61%, which is very good as of now. Okay, and now Altman Z score at 8.46. this is also looking very good. So all the factors are looking good except the earning per share growth as of now. Okay, but we will do the year on year profit loss analysis to see what is going on and why it is in negative. Okay, now you can see we'll compare the last 3 years data. Okay, so you can see in March 2021 the sales was 1604, which went up to 2273, then 3195. so very good growth in sales, which we just saw in the peer comparison, 3 years average sales growth. Operating profit went from 816 to 1109, then 1623. Here also we are getting to see very good growth. Okay, operating profit margin went up from 51% to 49%, then again 51%. Okay, a 2% drop here, and again it is back to same 51%, which is a good thing. So we can say that the operating profit margin is roughly around 50% most of the times. Now let's come to earning per share, and here we see that the earning per share dropped from increased from 48 to 54. Okay, then it dropped to 3.97. so why did this happen? So this happens when a company is listed publicly, and because of this huge drop in earning per share, we are getting to see a negative growth rate, but that can be misleading. Okay, remember that if you get caught up in that that kind of analysis, then you are going to miss good companies. Okay, when the company is listed, from there you should only count the earning per share growth. Okay, before it was listed, it will definitely be different. You can see it was more. Okay, 50, 40, 43, 31, 48, 54 before it was listed, but once it is listed, year on year it drops to 3.97. and definitely if the company does well with sales profit, you are going to see improvement in growth in earning per share in the next financial year. It will be more than 4 or 5 or 6, we do not know. Okay, so that is what happens. And In order to clear that fact, let us do the quarterly result analysis little bit. Okay, so here you can see in the month of June, in the quarter of June, September and December, we have the data and we can see some decent growth. Okay, here there has been little bit drop, but here we are getting to see decent growth. Okay, and here you can see the earning per share has kind of been stable. Okay, 1.72, then it is 1.21, 1.19, which is telling that there is not a major drop anywhere. Okay, and the data can be misleading if we do not do the proper analysis. Okay, so just to highlight the point, this negative earning per share growth that you are seeing, that is because of the company getting listed publicly, okay, in the stock exchange. That's why we are getting to see that drop. But the company's sales and operating profit are clearly growing, and operating profit margin has been stable and high. Okay, that's why there is no reason why the EPS is going to drop. Okay, so the company is actually fundamentally strong and growing as of now. Now let's check the shareholding pattern. So we can see we have the available data for September and December. So we can see the the promoters are holding the same stake. Okay, 85.61% and 85.61%. Okay, in the last two quarters, which is good thing. But the FIs have slightly reduced their stake by around 1.2%. We can say DIIs have reduced the stakes by very small margin, 0.05%. So that is negligible kind of thing. Okay, now you must be thinking that this is a negative side because we are getting to see FIs dropping their stake. But remember that in the December quarter, FIs do drop their stakes in many companies, although not all companies, but many companies, they do drop their stakes. Okay, and that is what we are getting to see here. And also, as per the rules of SEBI, the promoters cannot hold more than 75% in any company. Okay, and they have a particular time limit, 1 year, 1.5 year or 2 year. Okay, after that they will have to reduce the stake to 75% maximum. Okay, and definitely that is going to impact the the stake held by the FIs and DIs. Definitely they are going to increase their stake in the coming few quarters, that is for sure. So that's why we can say as of now the shareholding pattern, the promoter holding and FIs DIs is looking stable. There is no such negative thing like 5% drop somewhere or anything like that. Okay, it has been stable. So the overall view of fundamental analysis of JSW Infrastructure is telling that it's a strongly growing company with stable shareholding pattern. That's why it is fundamentally good. And if you are watching the video so far and liking my analysis, please hit the like button and subscribe to Financial Impulse if you have not done already. Now let's go to the price action side. Okay, so this is JSW Infrastructure. Okay, and it is in weekly time frame, and you can see as soon as it got listed here, okay, in the month of October 2023, it has been going up, but then we are getting to see some decline after it reached this 250 mark around. Okay, around there we are getting to see the drop, but it never went down strongly. In fact, we can clearly see the support at this level. Okay, the stock has been giving very good green candles here. Here is one green candle, then again one big green candle here. Then now we are getting to see that it is starting to go up again after breaking this short-term resistance level of 230 to 231, let's say. Okay, starting to go up. But in order to get a clear picture, I will take you to the daily time frame and do the analysis there and give you the final view. Okay, so this is the daily time frame, and let me use the famous 50 days exponential moving average to see if this price action is being supported by it or not. So I will enable the 50 days moving average, and you can clearly see how nicely this moving average is actually providing support. You can see back to back long wicks. Okay, and it pushed the price, the candle's body, to close above this moving average, which is a good thing, clear sign of strength. And then you can see this big breakout. Okay, now let's check the volume during this breakout. Okay, so let me enable the volume, and you can see very big volume bars here, very big volume bars. Okay, and I recommended it at buying at this level around in the community. Okay, 230, 231. If the price stays above that, you can see after this breakout, the next day the candle closed way above this 230 line. Then we get a red candle, but still it closes above 230 line, which is confirming that it's a clear breakout, not a fake one. And then yesterday we are getting to see a big green candle of around 4 to 5%. Okay, 4.5%. So So what does this tell us? So this is clearly telling that JSW Infrastructure, after getting listed, is in a very strong rally, okay, and it is not showing any signs of drop, okay. That's why it is giving us a very good opportunity for investment, okay. So people who are actually waiting to invest in a stock which is actually fundamentally stable, okay, and also there is good future prospect for this, for that company, and it belongs to a renowned group, okay, the JSW group, then this is a very good opportunity for you, because we can see the massive increase in sales and operating profit in this company, okay, huge increase, 40% increase in sales and 60% increase in profit. I mean, it is the average, 3 years average, so you can imagine how strongly it is going up. So I would recommend that you take an position at this price itself, 243, and at the time of recording the market is not yet open. 23rd February 2024 is the date, okay, and as soon as it opens, if you are waiting to invest in this company, or you have been looking for an opportunity to invest in this company for quite some times but did not clearly get where to make an entry, then I would say now is the best time to make an entry. It is clearly giving signs that a huge uptrend is on the way, okay. So that's all about JSW Infrastructure. I hope this video was helpful to you. Please hit the like button and subscribe to Financial Impulse. And if you are already a subscriber and finding my videos valuable, consider joining the Financial Impulse community, where I post more stock analysis, and also you can chat with me directly on Discord. Thank you for watching. I'll meet you in the next one. Bye. Take care.